Good evening, everyone. This is Srikanth Rajan, and welcome back to the Market Pulse podcast, where we discuss about what happened in the market last week and what could be expected the next week. So, last week was a very important week because we had the central bank in the US, that is the Federal Reserve, coming out with their monetary policy meeting details, and that actually was being anticipated by the market. And well, as expected, it did come out with the same result as expected. That was there was no change in rates of the central bank in the US. But then the only good announcement was that they are planning three rate cuts in this year. So well, that was taken by by the markets in the US positively, and the US markets have rallied up. Dow has actually hit an all-time high, and just on Friday, Dow has seen some profit booking just before the week's close. So this is about the US market, but what happened in the Indian market? So if you look at the Indian market, as soon as the US markets rallied up after the central bank's news, well, we did see a gap up opening from the lows. In fact, if you see last week, Indian stock market did hit a low of almost 21,709, which is almost 21,700. So which was a very good support taken from there, and from there it looks like the market is actually rebounding. So, if you look at the Indian market right from start of this year, from 2024, the markets have been consolidating in this very tight range. On the higher side, it has been around 22,200. On the lower side, around 21,500. So, this is the range the market has been consolidating on for a really long time. And this is something that we have discussed already, because Indian markets are still struggling to find a direction until at least probably the election is over in India. So well, of course, one good thing in this year is that in spite of the elections dates being announced, and still the Indian markets are not seeing a fear factor going up. That is the fear index, which is the we call the VIX, is still not going up and has been within the same range of 11 to 14. So, just for your information, in the past, during every election year or election month, as the election months were approaching, Indian markets used to see a huge VIX, which could go in the range of 30 plus. But this time, I'm talking about 30 plus, 30 to 38 levels. But then, at this point of time, it's very surprising to see the VIX being below 15. So that itself is a big surprise, because this is one of the rarest of occasions where this is happening. That means overall the markets are kind of feeling that there won't be a change in the government in this after this election. So we might see the same existing government coming back strongly. So that is the overall expectation of the market. But then, if at all there is a change in that during the election results, that is when probably markets could take the direction. So this is, well, I'm not representing any party here, but then I'm just talking from the stock market point of view. So a stable government is what the markets would expect to grow further. But then, if at all there's an unstable government, that could be causing some fear in the market. But as of now, because of this reason, probably the markets are in a huge consolidation phase in spite of the global markets rallying up really well. So if you remember, we had discussed about last January that this January that many analysts have expected that the top three markets in the world this year could be Japan, Vietnam, and India. Whereas Japan is already hitting all-time highs and gone by, I think, more than 20% since this year. Indian markets are still in the same place where it was in January. So Indian markets have a lot to catch up. So many a times it can happen that after a strong consolidation, it could go on a strong rally to catch up with the global markets. But then elections are kind of holding them up for now. In fact, last week, one more news was the focus on the IT sector. So if you see, Accenture in the US came out saying that the guidance level for the next quarter has been reduced because they're expecting a kind of dull quarter ahead. And this has put pressure on the Indian IT sector, especially the big ones like the TCS as well as the Infosys. Along with that, Tata Sons doing some stake sale in the TCS has kind of overall brought the Indian IT sector into a negative red. In fact, officially, Indian IT sector is short in the Indian stock market at this point of time. Well, Indian stock market, especially the IT sector, if you see, is just a service provider. So they are just service providers for most of the companies abroad, and because of that, if there is a slump in the European or the US market, Indian IT sector will also suffer. So that is what is seen right now. If you see, Infosys and TCS has not seen any significant rally, though for the last 1 year they have been kind of in a huge consolidation phase. In fact, last week we could see a huge fall in the American depository, in the US for this IT sectors or companies of India like Infosys and Wipro. But then in India already they were beaten down, so they have not seen major fall. But of course, Infosys is still looking weak, including TCS. So this is kind of hitting the market at this point of time. Along with that, the huge underperformance of HDFC Bank is kind of holding back the markets for now. But then, if you see at this point of time, like I said, if the consolidation is over, and if we could see the IT sector and the HDFC Bank supporting the market, we could expect the markets to rally further. But then, when is that going to come is a huge question at this point of time. So, well, this is something that we need to watch and wait and watch. But then, until then, simple thing is continue to do SIP mode of investment. Now, coming to this week ahead, in fact, this is the last week of the financial year and a very short week in the market as well, because tomorrow it's a holiday for Holi and markets will open only on Tuesday, and then again Good Friday is a holiday. So we have only 3 trading sessions, that is on Tuesday, Wednesday and Thursday. And Thursday being the monthly expiry, we could expect the markets to be really volatile this week. And the best part of this week is we also have the US GDP data coming in on I think Thursday or Friday, and on Wednesday. And then on Friday we have the Federal Reserve Chairman Jerome Powell speaking in the US. So these are 2 events which could be holding the markets for now for this week. And apart from that, if you see tomorrow, even though Indian markets are on holiday for Holi, global markets are open. So effect of that can be seen on the Indian market on Tuesday morning. But then for the Friday, Good Friday is a holiday in the US as well. So that should not be affecting Indian markets much. But however, the financial year closing is going to happen this week. So markets would not have any major movement at this point of time. And I'm expecting movement in the market only by April. So in April, we have the result season kicking off again. And the results in India would be the major heavyweight to come out with the results first would be the Infosys on 12th of April. So that would be in major focus for now, because as the IT sector in India itself is kind of in a very negative mode. So the results from Infosys will kind of give a direction to the IT sector. So that would be something that we will be watching out for some time now. Along with that, we have the focus on major US results also coming in April. So along with this, we could see the markets kind of starting to move as per the results of the companies. But then again, June 6th, if I'm not wrong, June 6th is the date where we have Indian election results coming out. So that would be yet another major focus. So April, May and June. So next 2 months plus the first week of June is where the markets are going to see a huge period of consolidation plus volatility is what I am expecting for now. But like I always say, never predict the market, but then just anticipate it and start investing to make long-term money in the market. So this podcast is majorly focusing on these important events. So we have kind of wrapped up what happened last week. But then one thing important to see is, in spite of the FIIs, the foreign institutional investors, continuously selling in the Indian market, the market has kind of absorbed all those selling without much fall in the Indian market. So this actually shows the kind of strength the mutual funds in India has, because the DIAs have been consistently buying with the huge fund flows coming in the form of SIPs to the Indian market. So that of course is a great strength to the market at this point of time. In fact, SEBI has been trying to put some control on investments coming to small cap and mid cap. In fact, not only that, from 1st of April, even the ETFs which are directly investing into outside market, outside India, would be stopped. So any funding to that also would stop from 1st of April. So if you have some investment going on there, I would say take a note and shift that to something better. If you want to understand which one is better, of course, do consult on a one-to-one meeting with us by registering on our website, mpinvest.com. So, well, that's about it for now for our investors who are invested through ETFs in the US market and other markets. We would be shifting them to new mutual fund portfolios from the 1st of April. So that's something on the cards for now. And apart from that, nothing else to be discussed for now. Tomorrow being a holiday, we will catch up only on Wednesday, because Tuesday, of course, I don't do the podcast as I am busy with my BNI meeting. So, well, that's it for now. Wishing you all a great week ahead. Wishing you all a happy Holi for tomorrow. Let's catch up with more details on Wednesday. So, just I would say 2 podcasts for the week, because that's Wednesday and Thursday. See you then with more details. See you all. Goodbye. But before you leave, do remember to press the like button, which I keep forgetting to tell. And do share the podcast with your friends and relatives to help them learn, invest, and grow with us. MPI Invest is your one-stop solution for a complete wealth management that includes planning where to invest, and when to exit from an investment. And not only that, understanding the right way of insuring yourself with the right health and life insurance. So we are your one-stop solution. So any of the services that you require with the right advice, do connect with us for a one-to-one meeting at mpiinvest.com. See you. Goodbye.